learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in on October 21st, 2020, and stimulus is going to crash the stock market. Or at least that is the question. We had a lot today. There was some developments that we need to talk about. It is interesting because we missed one of the deadlines, but this whole soft landing approach has given us another deadline, or at least that's what we've heard from politicians, but it might start having an effect on the stock market, or at least that's what I want to talk about here. But then we also saw some unique things with earnings. Not only was there our beloved Snapchat, but good old Netflix began, and this is the kickoff of earnings season. So what we saw here, it's telling us a few things. Even next week, it is going to be very, very interesting, only as far as the politics go. And remember, after this watch list, you're going to have 9 trading days left until the election. So we have a lot to talk about. I got the plays, I got the keys, what happened today, and then what we are going to be looking at tomorrow, as well as some custom earnings plays where we remixed it a little bit, and it might actually work in our favor today. So we're going to go over that. But let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want to meet the largest group of non-institutional Snapchat holders, young men and grown men who just love Snapchat, then we are the place to be. And I don't know if that's a factual statement or not. So option trading, shouldn't risk it. Those are financial investments, financial advice, on purpose only. Thank you everyone for today. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything? Post them below and source that info. Shout out to Chad, baby. So right off the bat, like we said, earnings is here. Now, before we talk about the stimulus a little bit, I would say watch for the market in general, because what we saw with Snapchat was very, very interesting, but it led to a feedback with Facebook as well too. So Snapchat is up 22% after hours. Shout out to the long-term portfolio. And now Snapchat is actually bigger in market cap than Twitter at this price range. But although that is an impressive move by Snapchat, this 5.6% or $14 move on Facebook is even bigger. So this could spark some of that earnings season run up. We'll see how it factors into any other industries, but clearly Facebook and Snap ad revenue, they're kind of related. It kind of giving that little run up here. So you might start seeing some premiums run up. And that's another thing we're going to talk about. All of these plays, even with Snapchat and even just this earnings season, this is why I'm even saying this stimulus could be so crucial, because the market is kind of broken right now as far as the UVXY is concerned, because you're getting all of this stuff happening, you're getting earnings, but you're not seeing prices move into it. Pretty much the UVXY is kind of showing us that earnings is already priced in, so we might find some really big bargains this season. So I hope you're ready. But watch the earnings, watch the continuations tomorrow, but even so, watch if this sparks anything else, and watch the winners and losers, especially Netflix, Snapchat, and now Facebook, some of those sympathies, and then how that carries over into any of the growth stocks. So that's what I'm going to be looking at tomorrow. But now, as far as today, the stimulus was key. Even after hours, it was the same thing as yesterday. Pelosi went in at 3 p.m. with Munchkin. They did not have an agreement, and this is the deadline that they said. The market stayed in a range, but they even stayed in a range as far as what they were discussing. But now they let out some new soft landing timelines. So we heard from Pelosi today, and she took a very, very different tone than what she was kind of taking last week. She was more hopeful, but she was talking about wanting to get a deal, and she was just much more positive about it. But then Schumer came on afterwards, and then he was a lot more negative. So it's kind of a switch, kind of what you saw Trump do last week, where he said, hey, we're backing out from the table. Then the next day he came on. Pretty much now Pelosi's like, no, I'm nice about it now. Not the stance she was taking about it last week, but then now you're seeing a flip-flop with Schumer and some of the other people in her party. But I'm still keeping hope we're going to get a stimulus. As we're seeing this play out, though, I just don't think it's looking good, and the market even reflects that, and the market even reflects exactly what we just talked about here and what happened throughout the day. This was Pelosi talking. It was very positive. Again, the market has been keeping hope. People are hopeful. I'm hopeful. You hear any positive comments, you're like, yeah, maybe we do get this stimulus before election. Maybe the problem is that bad. bad, but I showed you guys some of the data today on stream. We even have some stream markers if you want to go check it out on the actual video, but they might have a little bit more room for politics, or at least we're getting there. But you saw the market react positively, and then Schumer and all those guys came out, and then it pretty much took a whole different turn. They started talking about the stimulus deal a lot more negative, saying they're going to force a vote. They started going after McConnell, all of that stuff. So very, very political, and we may even be focusing a little too much on the politics. That's why watching these earnings and how they play out, and if they could break us out of this range or change pricing, that is going to be the key. But that is what we saw today. That's what we're going to be looking forward to. But she said if pretty much next week is the real deadline. She said if you don't have a deal by next week, and she didn't say if you don't, but she was saying if we get a deal by next week or some sort of agreement, we could get it to Senate the next week, and then that would be the scenario to which we actually get stimulus before the election. So that's what I mean by the soft landing timeline, but keep your eye out for that. Finally, as far as tomorrow, watch for follow-throughs, but not too big of a movement per se with the market, even post-earnings after this first week. Remember, these are big companies, but these aren't your biggest companies. This is not your biggest earnings week. So you're going to get a couple hundred companies next week, but now that we've seen some of these companies, it's probably going to move a little bit slower here. So I'm going to watch for follow-throughs in specific companies or sympathies that carry over. Watch to see if we get a spark in some areas or if we kind of gap up and stay in a range. And I really wouldn't expect too much out of the market, especially with this whole stimulus thing, and we're probably going to even keep hearing from it. You want to see if the market gets fuel from earnings, and if it breaks away. Again, just watch for a spark, but if there isn't a spark that kind of sets things off, the market is probably going to stay within a range. And then finally, like I said, VIX and option pricing is just very, very weird. And I mean by that is that it hasn't been moving for a long time this whole week, especially coming into this. So next week will really be the true judge. But then again, last week or the weeks before earnings, there was heightened volatility. So some stuff is expensive. You could kind of see that with the Snapchat calls on that option chain. But either way, we got a great start of earnings. I think it's only going to get more exciting. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I made a few different plays. I will go over them. One I really liked, we did make the Netflix play. I talked about this a little bit on the watch list yesterday, that I'm going to go for this higher credit strategy. We'll talk about it. It is a really, really good play. It's in the money. We receive more credit, but a lower probability. So the dollar risk was lower, but the risk of losing the play is higher because it's a lower probability. So we'll go over that. I did a Tesla credit spread, and I was being a little witch about it because I contradicted myself. I was even saying yesterday how I think we could even get a surpriser. It could be up or down, but I sold a put spread, and we talked about with credit spreads and making the range, it was just too big. I did $8,000-$9,000 on it, but we started seeing the market kind of give up. I was like, with these earnings, and if I think Tesla's going to surprise, and then they report later this week, pretty much the road was very, very narrow in the sense that it was either I was going to lose $8,000 and be forced to roll over in 2 days, essentially, or I could just not deal with it. So I took a $100 loss on that. And then finally, we're going to talk about Snap, why we love it, but how to even go about buying more. But even then, I made a Snap play. I bought puts at close, and I flipped the coin on it. I wasn't going to do it, but the real big idea was more gambly, but in the sense it was just to hedge. We have it over 20,000, even more. So those puts were pretty much just to hedge it. But now the next move is how do we roll over those credit spreads, but how do we buy more? So as far as rolling over, I'm going to wait. But now the question is buying more. Give it some time, but now the fact that we saw a positive report with Snapchat, it's going to help confirm our long thesis. So those are the three plays. As far as tomorrow, it is going to be watching the follow-up. But now to show you the play, this is the Netflix play I really, really liked, and this is what I'm probably going to do with these earnings if we could find them, because it's giving us better risk to rewards, and we'll show you the logic behind it, why this play just even beats doing just a normal put and why we do that. Again, different tools in the toolbox for different situations. So this was a Netflix credit spread. I shorted 10 of the 482 calls, and then I bought 10 of the 485 calls, and I received a credit of $2 per contract. Now, the difference between these is $2.50. So you're receiving $200 of credit per contract. You only have to put up the $50 per contract. So I did 10 of them. You come down here, you're seeing buying power is $2,500. That's the collateral required. Since you got $2 a contract on 10 contracts, that's $2,000. Your real risk is $500. That's the total max risk on this play. But if the stock drops, you would get $2,000. So now why did we do this play? It even went up a little bit towards close. I didn't realize we could have took profits on there. Took some. The best part about this play and why we did it is because the puts were expensive and it allowed us to play within the expected range. So we showed you guys the expected range on Netflix. We talked about that stuff yesterday. When you see it on here, it's about $40. They closed at $520. That is about $480. So the best part about this play is where we make money is if Netflix ends up dropping below $482, we keep the full $2,000. So it's a high credit play, high reward. Our risk is only $500, but since it's an in-the-money credit spread, it's a lower probability. But now using our option and earnings knowledge, the market was pricing in $40. This puts us firmly at the market expectations for earnings. So pretty much we bet with the market maker. We bet with the computer. We said, yeah, we kind of agree it'll move in that range. We weren't expecting a surprise or anything like that, because if you did, you would have bought the contract and made more. And now that's the logic comparing this play. So if you make $2,000, your risk is $500, and you can make $2,000 and you make that full 100% profit if the stock drops to 482 by Friday, what could you have done if you bought a put? So we showed this on stream. You would have pretty much got like a 490 or 487, and you would have had to pay about $500 for that play. But now come Friday, for you to make $2,000 on this contract, for this contract to be worth $2,000 by Friday, which is the scenario we need to win on the other one, you would need this contract to be $20 in the money to have $2,000 intrinsic value. So you would need Netflix at 460 or 467 to net that $2,000. So even in this case, these contracts might go up tomorrow and we could even compare them. But the idea with this credit spread, it allowed us to have less of a move. We didn't need to expect a 2 standard deviation move or more than what the market was pricing in. Again, $40 is almost 10%. Expecting a lower break even would be expecting even more of a move. So it was more likely that this would have happened than buying the put. But again, also less likely because you sold it in the money. It worked in our favor because we bet against the direction. So that was a really, really cool play. I really liked it because we'll see tomorrow. We're probably going to be able to make some money. You could close it out at any time. You just got to buy it back, and we'll probably be able to walk away with some profit since it dropped, but we will see and monitor that play. But I'm going to do this a lot on the earnings if it dictates it, and I'm going to do exactly what I just showed you. If I could kind of make an assessment on which way I think the stock is going to go, we could put our thesis to the test or kind of just bet in the probability that kind of is weighted more. Some stock, it just makes more sense to either be bullish or bearish depending on kind of the earnings and quarter. But I'm going to see the in the monies. I'm going to go look at what would be the price and break even if I bought the play. If the options are too expensive, this is a great strategy. But if the options are cheap or you think the stock will move a lot, you buy it, because in this case here too now, if Netflix ended up surprising and shot down to 460, I would have only made $2,000, and you probably could have made a lot more buying the contract. So that's kind of the key. Again, do not trade any credit spreads or do any of these unless you know the full risk. We have a bunch of tutorials on this, so I'm doing these so you can watch them. Again, we're down like 18,000 on the last credit spread, so keep that in mind. Don't you forget. Don't you ever forget, okay? Ever. They're scary, but they're not that scary. But still. And this was the Tesla credit spread. I sold it this morning. I got 48 cents. I bought it back at 10 cents. I lost like $90 on it. Again, I said I'd rather not deal with it. We'll see again how that plays out. I probably was just being chicken, but I did not want those problems. And then those are the snap puts we got. And then I closed out that Disney credit spread from last week. Had a $900 collateral. We got about $450 from it, so about half of it. And then now finally, as far as everything else tomorrow, I will watch Facebook and the sympathies. I really want to see what Snap sparks. But now, even this question, Snap is at a very key level. Even their market cap, this is very, very big for them. It's the first time they're going profitable. I might even make another video about this. You guys know we love Snap, but am I going to buy more? Yes. The key is going to be with timing. So we don't have a monthly deposit. I want to let this go through. My first key is going to be doing that rollover. So you made a ton on the long term. We're up 4,200, but remember we did that rollover last week and you see how it benefited us. I would have had to give up 400 shares at 21. The rollover saved us. Now we have to give them at 32. So now I'm still not going to capture $200 per share above 30 or 32. So now the key is just give it some time. You saw how we refinanced it. You could just push this to the max until somebody exercises you. So we'll just go from there and wait. But otherwise, we still have the equity and we know we have a way out of that. You guys already got to see that. But we're up a lot, saying 116% on that snap position. If you got it on the smaller accounts, we're up 186. But the key is waiting for the rollover if you have the covered calls. But then I'll see next deposit. It is still the same exact company. company. It is at a higher price, but now you have a bigger confirmation. However, things could still backtrack a little bit. The first profitable quarter, again, picture Tesla. It will be a bumpy road, but it is still a good sign. So I still want to acquire, and that's the idea we've always had. But patience and balance, considering now this is a huge portion of the long term. I could balance way other things now, as this has been doing a lot of work for us. But congrats to that. We're going to talk about this a lot more, and I think this might even be a good option play to watch tomorrow. Then watch Amazon, considering all, again, tech run-up or anything of that nature. Facebook goes there. Watch Texas Instruments. They ended up not doing what I was expecting, not moving a lot. We didn't play that one, so watch them. Watch Disney, negative California news, and I closed that spread. We'll see. I think Netflix could have a continuation. If it drops pretty much $10 tomorrow, we should be able to take a good portion of that profit from that play, so we'll see. Watch Snap, watch Uber. I really like them today. They did very, very good. There's a few different reasons I heard with it, but they're coming into earnings. I just like how they're kind of surprising there, but keep your eye on for them. They were a real standout today. Snow, as far as IPOs go, it's been talked a lot about on CNBC, but now it keeps hitting this price. You really just want to see if it breaks out and how it does it, but I'm still holding all those shares, so we'll go from there and see what happens. Watch Intel, still holding those. It kind of gave up. I'm surprised with that, but don't forget, their earnings is coming up, so this could create an opportunity to take advantage of that. So keep an eye out for them tomorrow. Then WDC, I really liked, but this is what I was even saying all day today, even with the VIX. The option prices aren't really reflecting, and that's what's kind of been keeping me hesitant on some of these plays. That's why some of those in-the-money credit spread plays worked, but watch WDC, watch Starbucks. I want to see if they surprise, and only because we've held those options. They've gone up a lot and held up, but the options have decayed heavily. So I think this might create an opportunity for earnings if they surprise on either direction. Maybe a strangle, we'll see, but I'm not going to get too jumpy just yet. And finally, I'm not going to bring up GLD, UUP, any of that. Watch UVXY. That is going to be the key. If you don't start seeing big movements, especially after big earnings moves or even leading into it, that could be an indicator that something is a little bit out of whack here. So pay close attention to that, especially intraday, even our Netflix earnings indicator. But it's going to be exciting either way. That is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to understand you're chosen. Implied volatility is a result, not a cost. The same thing goes with you, baby. The cult loves you. I love you. I'm going to see you in the morning. Let's go.